Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. We've been coming to you live from Consensus in Austin, Texas, and joining me for this segment, we have Rennick Palley. He's founding partner at Stratos, and we're here to discuss the current state of the crypto market and why the industry experienced a decade in a week. Rennick, it's great to meet with you. Welcome to TradeTalks.
Thanks for having me.
You got it. Let's talk about market structure first. Post-halving, are you seeing anything in terms of improvement with liquidity? Anything that stands out to you?
Yeah, so historically the period following the halving typically is a period of consolidation for Bitcoin. So we're seeing that happen right now. Bitcoin's been chopping around the same levels generally for the last few weeks. We think that's going to continue to happen, but the thing that's going to really push it beyond the range highs that it's been at, which is in the low 70s, is actually Fed and other central bank money printing. So we're expecting to see a lot more liquidity enter the market towards the back half of the year. And so that's when we expect crypto, other risk assets, and Bitcoin especially to really rally.
Yeah, and I want to talk about regulations for a moment here, because you had pointed out we experienced a decade in a week. We've certainly seen a much more progressive shift when it comes to crypto in DC, which of course is encouraging as the industry. We've been looking for some sort of a framework for years.
Yeah, so the decade in the week is really means that there were 6 significant things that happened last week that were all pro-crypto, and that's been a change in stance from the existing administration. Obviously, the last 4 years, they've been very anti-crypto, and I think what they realized is there's a big enough voter bloc in the US that is pro-crypto that it's a lose-lose to be anti-crypto, and they don't gain anything if they're anti-crypto, so they've decided, look, we're going to lose voters to the Republicans if we don't switch and go pro-crypto. So it was a really significant change in just 1 week.
I think even regardless that we're in an election year, you don't want to stifle innovation, right? You don't want that brain drain of the talent leaving the US and going to other places,
right.
Whether it's blockchain, market structure, digital assets, the trading of it. I mean, the brain drain has been pretty significant because of a lack of framework.
Yeah, that's right. I mean, I know several venture capital general partners who've actually left the United States because of that, as well as quite a few of our portfolio companies have either left the United States or decided to form their companies outside of the United States for that. And some of the smartest people in the world are working on crypto. It's really not a good stance for our country to be anti-crypto.
I mean, you look at Consensus. I've been covering it since 2018, and I can tell you this year it is so capital markets focused. And I think because market structure is improving and we're starting to hear more about a framework, that will help with more institutional adoption.
I think so. The other thing is, the narrative around Fed money printing and just the degree to which fiat is going to be printed over the next few decades has really started to come to light, not just to crypto faithful, but to everyone in capital markets. And so people are starting to look to crypto for its original intended use case, which is to be hard money outside of the existing fiat system.
What about your outlook short and longer term?
Short term, like I said, I think things are going to consolidate. We've seen alts come off their highs. They seem to be finding a bottom here in the last few weeks. Memes in particular have been really hot this year. They also came off the highs, but have found a new footing, and actually some of them are making new highs now. And so we expect the rest of the market to follow in the short term. Longer term, over the next few years, I see Bitcoin getting to potentially as high as 200K. Some of the other major assets like ETH and Solana could have even higher multiples from where they are today. So very bullish over the long term.
So let's talk about Stratos for a moment here. You are investing in companies within the digital asset ecosystem. What type of attributes are you looking at when you're thinking about deploying capital to a project?
Yeah, so we have 3 funds. We have a liquid hedge fund that typically owns the large liquid tokens, but also has been investing in memes and a few other alts. We then have 2 early stage venture funds. We'll have a 3rd later this year. And those funds are focused on very early stage infrastructure projects primarily that will eventually launch a token in the next 1 to 2 years. Yeah. And so we've also started to become more interested in some of the consumer and app layer opportunities. We were early in real world assets, RWAs. We are early in DePIN as just an example of some of the things that we've invested in on the app layer. And now we think that social is going to have its time in the sun. So we're getting more interested in that area as well.
A lot more about DeSo.
Yeah.
It's really interesting to follow those projects. How will it differ from how we know social media now, or how will it compare?
There are 2 major differences. The first one is the fact that the social graph is going to be decentralized and open source, meaning that there's not one category of people that can control what you see on your timeline and how you interact with your friends. That is all going to be open source and controlled by the network itself. The other thing is there's going to be a new financial component. So if you look at traditional social media, the creators make a very small percentage of what they actually generate, and the users actually don't make anything. They are the product. They get sold advertising, and that's the business model
Well,
of the
our data
platforms.
gets sold too, right?
Correct. And so with Web3 social, we expect that users and creators will actually make money. On the user side, there's going to be some financial incentives for them to use the platforms, and on the creator side, they're actually going to generate a much higher take rate of what revenue and economics they're actually producing with their content.
How long do you think, let's call it 3 to 5 years, will you see scalable adoption of perhaps?
Yeah, I mean, we've been investing in the infrastructure layer for the last 4 years, and so when we look at where we were then to where we are today, there's been a lot of talk about, decentralized social being the next big thing, but the infrastructure wasn't there until right around now. We're getting to that period where the wallet infrastructure is there, these ideas of account abstraction, chain abstraction, things like that that make the UX much better than the traditional sort of like MetaMask experience. And then also the actual scalability of the underlying block producing networks is improved as well. So I think now is the time for decentralized social to actually take off because it's going to rival the user experience of the existing networks.
Yeah, it's going to be exciting to watch. Appreciate the insight, Rennick. Thanks for joining us on Trade Talks. And thanks for joining me from Consensus. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.